What's up, YouTube fam? Welcome back to the channel. We got a decent day for you guys. It says that we're up 3,200, but being that when I posted my last video, we were at 82, and now we are here at 80.7, I would say that we're actually down a couple $1,000s. So with that being said, here's where we're at with this account. Now I want to take the second to address one thing real quick. Someone commented on one of my videos that I only post when I'm winning. So I just want to talk about real quick the transparency that I have displayed on this channel. I have shown the fact that these are all the deposits into the account, right? We've deposited $100,000, and at this moment we are sitting at 80.7, and I'm pretty proud of it. Why? Because let's go look at the date that this money hit, February 24th and February 25th, and we can pick any stock you want, right? Let's look at Tesla, right? Where was Tesla at on February 24th? Well, only, 60% higher, right? Let's look at Coinbase. Where was Coinbase at February 24th? Only like 50-60% higher. We can go on for a while, right? We could look at any stock, truthfully, of where they were on that date. Now, listen, this is not me saying that I'm outperforming the market. And obviously there are stocks that are going to be, doing better than down 20% since that day. But in the end of the day, I am an options trader trading leveraged instruments, and we have gone through some of the most bearish month that the market has ever seen. And I'm only sitting here down, 19.8% year to date. So I'm not mad about it. And that's what I want to talk about in this video, right? Is the difference between symmetrical risk and asymmetrical risk. Because I believe as an options trader, to have the most success, you need to be taking on both. So what is the difference between the two? Well, asymmetrical risk is anytime you can win a large amount while risking a small amount. And how would you clarify that? You would clarify that in buying options. A symmetrical risk is anytime you're risking, a relative amount and you're going to make that amount, and you win or you lose, right? Almost like a straight bet versus a parlay for anyone who's into sports betting, right? But let's look at these trades, okay? So recently I took this call. Now, this was actually me taking profit because I had happened to be buying calls the whole way down, basically. And I was losing a lot of trades. Yes, I was, and I still have been. But what happened was I happened to be in calls before this huge pump, and they went up 300-400%. So instead of closing, what I did was rolled them into further out, because this way I was able to take profit while still being in the action. Now, I also bought some other calls that I sold, right? And I sold them for losses. Now, what is the moral of the story, right? In the end of the day, these were zero. So I didn't purchase them, yesterday. I purchased them 2 days ago, but these were risks that I looked at as asymmetrical risks, right? Why? Because I was risking a small amount to make a large amount. In that case, it didn't pay off. Overall, on the week, it has paid off, right? And overall, majority of my focus is on more of symmetrical bets than asymmetrical. But I do believe, again, as an option buyer or an option trader, you want to be doing a little bit of both, right? So in this case, I have these covered calls that are currently sitting at up $376. And this is a symmetrical bet. Why? Because I can only make this amount times by 3, and whatever is left is what I can make, times by 4. But ultimately, I just know that I can only make this amount. And if we look at the options chain and we go and we click sell calls and we go to that date, these have roughly an 80% chance of being profitable for me as an option seller. So with that being said, it's a very symmetrical bet. I know I should make, 1,200, 1,400, and I know it should win, but there's the chance it doesn't, and ultimately I can still lose a large amount. Now, obviously we can get closer strikes and make more premium, but at this point of my option selling career, especially with selling calls, I've realized that trying to get greedy when it comes to selling calls is what will lead to almost the most pain, more than selling puts. I think as human beings, when it's investments that we like, we get emotional about them. We want to see them win. And ultimately, when you sell calls and you get greedy and you get too close to the money, and then you're so deep in the money, it gets very painful. Now, assuming this market does continue to dump now, I would at that point roll these calls closer to the money, because obviously if these become relatively worthless, it's not going to be worth holding for another 70 days. But the point is, majority of my money is in symmetrical risks like covered calls, right? Like cash secured puts. Again, in this case, I have until next Friday. If this doesn't expire, if this expires above $8.50, I will win on this position. If it doesn't, I will lose, right? And if I lose, I just have to buy the shares. It's a very symmetrical risk. I'm going to make So put it this way, right? I've invested 850 times by 2, 1,700 to make over $100 on the investment, right? So I'm making close to 10% while also having an 80% chance of winning. It's a great trade. Obviously, SOXL can crash a lot lower though. And that's where, being a little bit of an option buyer isn't the worst thing in the world, right? Because the thing about selling options is you need a large amount of capital, right? So if you were to buy 100 shares of SOXL at $59, it would require $5,900, right? Now, imagine the fact that it's down 80%. You would be down 80% on the $5,900. Now, you probably would have collected, maybe 5 to 10% in premium. So maybe you would have collected, let's just say 1,000 just to be nice. You still would be down, $3,000, $4,000 on this position, where if you would have just bought calls, right, you might have only lost 300. Now, obviously, if you would have just been buying calls this whole way down, you would have just been getting crushed. But the point is, when it comes to the world of options, I think the best way to go about it is to be taking these symmetrical risks, like selling puts, like selling calls. Now, obviously, when you sell puts at a very, basically the market top, you end up like this, right, where, as you can see, my average cost on TQQQ is $79. Now, I have been collecting tons and tons of covered call income since I've been assigned, but I do also have these 2 leaps that I haven't been able to sell covered calls on because of the fact that the strike is 65. So I do need us to get a little closer to the strike to start selling leaps, only because when you sell for a strike below the leap, then you have to cover the margin, where, with shares, you never need to worry about that and you can roll out basically forever. Leaps do limit you in the sense of selling calls below the strike, and of course the time decay of knowing that we only have until 2027. There are limitations to leaps, right? And these are things that I'm just, I don't want to say learning, but ultimately learning, right? Because sometimes the best way to learn is the hard way. And at the end of the day, it's not even necessarily like I regret buying leaps. I think ultimately, even something like leap options makes sense to start buying, after these types of dumps, because obviously getting in up here, listen, assuming this bull trend does start continuing, then yeah, we can start, just taking these calls again and ripping the calls. But obviously getting in up here, it will kill you, right? Now, obviously, you can buy more leaps and double down on that position. But the problem is that when your strike gets so far out of the money, it just becomes a little bit of a headache, truthfully. So for me at this moment, I am trying to lay off leaps and instead, looking to get more cash secured puts positions. Obviously, SOXL is a new cash secured put that I've only recently started taking, and I'm still selling covered calls on UPRO, even though it's below my leap strike, because it's only $5 below. This being, $17 below is what makes it a little different, because then, again, you would need whatever the amount that you're selling at. So obviously, in this case, it's a $65 call. If I wanted to sell a call for, let's just say 56, I would need $900 in margin in the account to cover the case of getting assigned. Now, obviously, if I'm selling calls at 56, I'm never going to get assigned at 56, because I would at least start rolling, a couple times, right? I would never just get assigned the first time I'm in the money. But that's how I go about selling calls. And ultimately, selling calls has been able to generate a lot of income. It's allowed me to take a position like this on SOXL, where, this was $1,700. I didn't have $1,700 just laying around in buying power, right? I had all of it in shares and puts, and selling calls is what frees up the buying power. So the ultimate answer, in my opinion, in terms of trading options and the world of being an options trader, is putting majority of your focus into selling cash secured puts until you get assigned shares, similar to like I did here. And with IBIT is setting up to be a very, very profitable position for me. Why? Because I have $238 in total return, and I've been collecting covered calls for the last, 2 months, 3 months. So since I've been assigned, which was, I don't know if it even says the date I bought. Let's see. Yeah, I don't know when I bought the shares, but since I've been assigned, I've collected thousands of dollars in covered call income. So it's like the fact that I'm break even on the entry, and I have all of these covered calls, right? 51.5, all of these, right? That essentially, even if they did end up going deep in the money, I wouldn't even care about getting assigned, because they're all winning positions, and I would just start selling more cash secured puts on IBIT to just do it again. Now, ultimately, if let's just say Bitcoin shoots up and IBIT shoots way past all my strikes, then I might as well roll, because at that point, as far up as I can roll, I'll take it, right? Because anything's better than losing the shares. So I'll just keep rolling higher, even if it takes 2 months, 3 months, because, it's almost like just deciding what makes the most sense. If you have to keep rolling up, even if you're still in the money, eventually the market will crash. If your expiration is far enough, you shouldn't get early assignment. So even if you're deep in the money, and if you keep rolling months out, eventually you would like to believe it would crash and it will expire worthless. Now there's 2 ways to look at it, right? That's if you never want to lose your shares. But in this case of me being in the profit on all of these, I almost wouldn't even care if I lost all my shares and then just started selling cash secured puts again, which is of course the wheel strategy. And ultimately that's the strategy I've been using on both TQQQ and IBIT. Now TQQQ has been even more, it's been getting crushed even more, right? TQQQ is down 40% since year to date, and IBIT is down 13%, right? So that's the difference between leverage and just a regular asset. And people ask me, why do I choose IBIT over BitX? That is exactly why, right? Because the leverage on TQQQ and UPRO is enough for me. And if I'm going to be in crypto, I don't necessarily need leverage. Now, again, back to the symmetrical aspect, the asymmetrical is the fact that, one, we have shares and these shares can go up forever and we can roll these covered calls out more and more. And two, as these shares and covered calls produce income, we can either reinvest that into selling more options or, of course, like I said, at times buying options, which, this week it didn't work out. It worked out earlier, but then I just bought more options. So to me, I definitely like to take those gambles, those asymmetrical risks, right? Now, hypothetically, I wouldn't want to start buying far out of the money. If you're going to buy something at the money or close to it, right? And something like this, where this $2 could easily be worth $6 as long as, it gets in the money, right? So if let's just say the next 2 weeks, TQQQ goes from 48 all the way to, 58, 59, which is very possible. Now you're turning 200 into 600 and you would never have lost more than 200, right? So as much as I truly believe selling options makes the most sense and is the best strategy when it comes to the world of options, I do believe there's always going to be a time and a place for buying calls and for buying puts, right? All the traders that you see on social media that make the largest amounts are doing that type of stuff. Now, again, I'm not sitting here and saying I'm a day trader. I'm not sitting here and saying I would like to be the best day trader in the world, right? That's why I got into the world of selling options. But when the market is trending, right? This whole time, if you would have been reinvesting some of your profits into buying puts, right, on all of these days, you legitimately could have been making back a lot of the money that you were losing, right? So for me, I'm only down 20,000. And if I would have had a few winning options trades to go along with it, we might actually be only down 10,000, right? So now that, in my opinion, I think the market is potentially nearing a bottom. I'm not saying it is bottoming, but it's potential. If we start going on this uptrend, reinvesting some of the income into, just buying calls potentially, it's not something that I can necessarily fight against, right? It's not something that I think is such a bad idea, because ultimately I do believe to have the most success, you need that combination of asymmetrical and symmetrical risks, right? So for me, majority of my time and money will still be in cash secured puts and covered calls, but putting some of your profits into buying calls or buying puts, especially if you're into trading, right? For me, I'm into trading. I'm always into, learning whatever is going to make the most money the fastest. Now, for me, I do truly believe selling options is the safer bet. It's the real income. It's almost like the difference between a pipe dream and just getting a real job, right? Selling options is all right, it's the real job that can make real income, while buying options is that pipe dream where people always say, hey, stick to your day job. For me, I like to figure out a world where I can do both. And that's the thing. The market can stay irrational longer than you can stay solvent. For me, selling calls has kept me solvent in tough times. And in the end of the day, buying options, buying calls, buying puts has been, the irrational way. And if I would have been putting all of my money into buying options, I would be broke by now. And that's the moral of the story, right? Is I've had accounts that I've started with 10,000 that I've blown it all, right? From just trying to be a day trader. So putting majority of your money into a real income, and then using that to take those day trades that you might have always dreamed of is truthfully the smartest way to go about options. There's no better way, because as long as you're trading money that doesn't feel like a lot, right? For me, if I started a small account with $1,000 and I lost $600 buying calls, I'd be devastated. But for me to lose $600 buying calls on this account, I don't even feel it. And the covered call income makes so much more than that anyway, that I just keep it going. I just keep rolling and buying more covered calls. using that to fund, the trades that actually can put on the most risk, but, reap the most benefit, and taking it from there. So hope you feel like you got something out of this video. I hope you feel like you're learning. It's definitely nice to be back in the winning side, because we've been all the way down to $70,000. And I'm not afraid to admit that, the starting balance on this account was $100,000. We've definitely been taking risky plays, but it's nice to see us trending in the right direction, getting back to break even, getting back to profit, and just taking it from there. Because I still truly believe that we can get this account from 80 to the high 100s, if not 200, within the next year or so. So make sure to subscribe so you can be a part of this journey. I hope you enjoyed this video, and I will see you in the next one.